Hey guys, welcome back to Smart Wallet and Me, where financial wisdom matters. Today I have another stock that I have brought to you, and it's called Micron Technology with the ticker symbol MU. Micron Technology manufactures memory chips including dynamic random access memory, DRAM, and NAND flash memory. And in the long run, according to this Motley Fool article, it says that in the long run, demand for memory chips will only grow, and that's especially true in the AI industry. A lot of new vehicles and airplanes and ships and trucks are going to be using more AI chips and semiconductor chips to be able to process all of the data that has been coming in. So as this industry of AI increases, there will be a higher demand for these types of memory chips. And Micron Technology is one of those companies that provides these kinds of chips, along with NVIDIA. They're another one, but their price stock is too high and is overvalued in my opinion, even though they're a very good stock and a very good company. But today I'm going to be talking about Micron Technology, and you'll see that this company right now is currently undervalued in my opinion. So the current price right now is $54.38. My analysis of my high estimate of what the stock should be, my low estimate of what the stock should be, and then my average. And I'm going to show you how I got these numbers so you can have an idea of what I'm referring to. So my high earnings per share is $4.52, and my low estimate is $1.71. And I'm going to get back to that number because I believe this number is very, very low. And then my average is $3.01. And we have a surprise growth rate of 6%, giving us a new earnings per share of $4.79, $1.81, and $3.19. And when we plug in this number and put in the PE ratios of 14, 23, and 22, roughly, we get a high price target for $68.56 on the high estimate, and then $41.69 on the low estimate, which is a negative 30.4 decline from where the price is right now. And the high estimate is a positive 20.7% from where the stock price is right now. And my average price of this stock is $69.49, which means it has a 21.7% potential for it to grow from where it is right now. So guys, let's dive into it and let me show you guys where I got all these numbers from. My earnings per share is for the fiscal year of 2021. Their fiscal year just ended in September, and so we are now in their first quarter of 2021 in their first year. And so my low estimate I'm getting from here 171, the high estimate of 452, and the average of 301. So a year ago, their earnings per share was 283, which was just last month, which would be their full year closing for their fiscal year. And if you look at their earnings per share trend, you can see that their estimate as of November 2020 is 47 cents. 7 days ago it was 47 cents, and 90 days ago it was 97 cents. So their earnings per share seems to be going downwards instead of going higher. And for their next quarter, for February 2021, their earnings per share also dropped from 95 cents 90 days ago to 44 cents currently. And for the current year, again, their earnings per share dropped from 472 to 301. But their earnings history in the past have shown that their earnings have increased with a surprise rate of 2.1, 21.6, 6.5, and 9.1%. So I'm going to take an average of all of these. Okay guys, so if we take the combination of all of those surprise growth rates and take an average of it, we get 6%. And whenever you multiply the earnings per share with the surprise growth rate, we're saying that they're going to surprise us with a higher growth rate and have a new earnings per share. We're going to come up with these higher numbers right here. And when we plug these numbers in with the P ratios of 14 and 23 and 22 coming from Yahoo's website here, you can see that we're coming up with a different stock price here of $68.56, $41.69, and $69.49 from where we are from the current price. So now let's take a look at the chart for this stock. I did a Fibonacci retracement level on this stock from the highs of $59 back in February 2020 to the lows of March of 34.69, and you can see that the support level is at $49 right now, which sits perfectly with the Fibonacci retracement level at 61.8%. And you can see here that the stock price has broken out from the 50-day and 200-day moving averages. The 50-day moving average is 48.04 and the 200-day moving average is 49.11. And right now we're sitting at 54.38. And also, just to give you guys the RSI, currently is 69, the money flow is 81, and the momentum is 8. To give you guys the money flow, basically anything that is over 80 means that it's overbought. Anything below 20 means it's oversold. So currently we are overbought on this stock. So the stock price is overbought. It should come down a little bit more because according to this, we are at 81, and the low right here was below 20, which was oversold, and the stock price over here was around 42.66. So I would wait until there's some kind of pullback before I make any purchase on this stock. But I think in the long run, if you're thinking about purchasing anything in the AI industry and trying to get into this market before the rush begins, I think that you guys will be doing a good idea. I know there's a lot of other competitors like Broadcom, Nvidia, Micron Technology. These stocks are very good when it comes to semiconductors, as well as Intel. I believe Intel is another great company to look at. If we look at the earnings per share for this stock for the last year, for August 31, 2020, it was $2.37. That's why I wanted to get back to this number here, about 171. I think that the earnings per share here is too low. So even if we say that the price earnings per share for this stock on the low side would come up somewhere close to what it was last year, and if we put 237 here instead, then this would be a more reasonable amount for the low side. So 57.78 is a better analysis for the low side compared to what it was that I had here, $1.71. That's just my opinion. I don't know if that will be the case or not for this coming year. We have to see if that will continue to take place or not. But the earnings per share is supposed to be announced around December 16th of this year for their quarterly earnings, but they haven't really announced anything yet. So it is yet to be seen what their earnings per share would be in the coming quarter. And it might be announced sometime soon. So guys, let me know what you think about this analysis and if you agree with my stock price. And also, according to the analyst ratings, according to MarketBeat and Yahoo, they have a consensus price target of $62.20 for this stock. It is up from $14.38 from its current price, and they have a 2.71 rating score. 1 sell ratings, 8 hold ratings, 21 buy ratings, and 1 strong buy rating. And the same thing goes for the Yahoo recommended trends. They have a very good analysis here as well. They have 8 strong buys and 20 buys and 3 holds as of October. They have a 2.1 rating for buy currently. So guys, let me know what you think about this stock, if you guys agree with this, and if you think that this is a good buy or not. I would love to hear your comments down below. Let me know if you guys agree with this or not. If you guys like this video, please like it. Please smash that like button right now, and please subscribe to my channel because it will help my channel greatly, and it doesn't cost you anything to do that. Thank you very much, and I'll see you guys in the next video.